Hello there, dividend growth stock investors. It is Colby, the DJI Crab, coming to you a day late and a buck long. I always do a video, typically on Fridays, the last trading day of the week, to go through the 4 tiers, each of the 60 dividend growth stocks this channel focuses on, and look at where the value is. I got caught up yesterday, late afternoon, purchasing a car. The old car just completely conked out on me a bit unexpectedly this week, so had to make a move quickly. Pretty happy with the purchase. 2022 Nissan Rogue, if you are interested in cars. First SUV that I've ever owned, a little crossover. So if anyone has a Nissan Rogue, let me know how you like it, because that's what I'm sitting on right now. So far, so good. But yeah, video's a day late. Thank you for hanging in there with me, you guys. But like I do every single week, we're going to look at stocks, see where the value lies, and figure out a way to add some dividend income, making a plan going through the week. A little preview here. Definitely a few really high quality stocks that are looking to be very much on sale. Now, I'm not a professional financial advisor. The content of this channel should be considered primarily for entertainment, and the opinions expressed regarding investments are my own. You should always perform your own due diligence prior to investing your hard-earned money. So what is the DJI Crab Allocation Strategy? If you're new to the channel, I consider age and timeline the most appropriate metric and important metric when adding dividend income. 60 dividend growth stocks split into 4 tiers, tier 1 being for the younger investors, all the way up to tier 4 for the older investors. So how do I go about this? Well, minimum of 50% of new money goes into age-appropriate ETFs. Stocks yielding 30% or more above their 4-year average yield are the target for this crab. Unless it is one of my top 10 favorite stocks, my personal preference, if they are yielding 20% or more above their 4-year average yield, then I will buy those stocks regardless of what tier that I am in. I remain in my tier unless there is a stock in a different tier that is yielding 50% or more above their 4-year average yield. That looks like a stock that is massively undervalued in my estimation. And finally, if there don't happen to be any buyable stocks within my current tier, then I'm just going to add more to my ETFs. So that is the strategy. Let's jump into the spreadsheet, y'all, and see where we are at. Tier 1 for our 18 to 30-year-old investors, where we are looking to acquire lower starting yield, typically in the 1% range, but hoping to get cumulative annual dividend growth well above 10%. And in tier 1, we're still just looking at Nike sitting alone as the primary value in tier 1. Nordson is very close with its 28.9% off the 4-year average yield. I'm getting these valuation numbers by comparing the 4-year average yield to the current day yield. Just by the way, I update the 4-year average yield every single Friday, so we can make sure that this is accurate all the way down to the basis point. And there are some other ones that are sitting in here that aren't necessarily overvalued, but maybe more trading at fair price. Everything from lows up is certainly not a terrible deal, but I like to focus on the stuff that is very undervalued. Nike has been undervalued since June, and if not a little bit longer than that. The 4-year average yield does continue to tick up, so the longer Nike's down here in the basement, then the more this average yield is going to tick up, making the valuation less appealing. But Nike is still trading at 2018 prices, so I'm going to consider that a massive discount if I'm in the tier 1. And because that is 72% above the 4-year average yield, this is one that's pretty much open season for any of the tiers. Moving into tier 2, age 31 to 41-year-old investors, the tier I will be in for the rest of the year until next November. I'm looking to acquire in this tier 2 to 3% starting yield with an average dividend growth rate in the high single digits, like 8-9%, if not better. Hershey is the only stock in this particular tier that is undervalued, but it is well above that 50% undervalued mark. So this is another one that's open season for any tier. It's a great ad, in my opinion. The yield has shot well above 3%. That 4-year average yield is just 2%. So Hershey, going through it right now, really struggling with those high cocoa prices. I do believe Hershey is going to be a turnaround story, and it is a stock that doesn't go massively on sale a lot, but lately this year it has been taking a beating, so this crab has been buying. I definitely bought more Hershey this week. I'll show you what I bought this week when we get into the strategy tab. Target fell out of the buy zone just a little bit. I'm looking for Target basically under $150. And McCormick is starting to creep back up into the buy zone. It's not quite there yet, but I was adding some McCormick a little earlier in the year when its prices were down in the high 60s, and I will be happy to do so again if it could fall a little bit more. American States Water, Starbucks, NextEra Energy, decent deals, but I'm waiting on all of these. McDonald's and Union Pacific, two of my top 10 favorite stocks, are they had a little bit of a pullback this week, but definitely I'm still going to hold on and wait on this stuff. And by the way, the stuff that's sitting here in red, I don't sell this stuff, you guys. I will just simply hold this position, let dividend reinvestment continue to add on, and but I'm just not going to add any new money until I feel like I'm getting a better deal. Tier 3 for the 42 to 53-year-old investors, where we're looking to get 3 to 4% starting yield and a growth rate in the mid to high single digits, hopefully like 6 to 8% cumulatively with this group. Archer Daniels Midland, well above that 50% threshold. Man, they are really having a hard time. I wish a week and a half ago when they very briefly dipped under $50, I'd been paying attention and bought some. But I did miss it at that price point, but I still love it here at 53. Fantastic value, 4-year average yield of 2.41%, currently yielding 3.75%. I think that dividend is safe. They can certainly afford it. They can afford to keep growing it. And I don't have any reason to think that they won't, but it's been a hard year for Archer Daniels Midland. Bad accounting. And they are paying a price for it, but I am happy to add to it and take advantage of it when it's on sale. Hormel, wow, Hormel really, really struggling. It was right at that 50% mark, just a shade below. 4-year average yield is up to 2.58%, but currently yielding 3.87%. Hormel Foods, the dividend king with 57 years of increasing the dividend, is just having a horrible, horrible year. Like Hershey, I think that they are going to have a turnaround at some point in time, but wow, they are really taking a beating, and right at that point where about any tier could scoop in there and invest. I'm just stunned that Hormel's dropped down here below $30. Looks like a great buy to me. Genuine Parts Company has partially recovered from their massive fall off when they reported bad earnings recently this past quarter. They got down all the way to like 114, and at that point they were just, that was just a fire sale, and they've recovered a little bit, but not all the way back just yet. American Tower has had a pullback recently. It's kind of a tough week in the REIT space. I'm still waiting on American Tower to get just a little bit cheaper than 196, but certainly not a bad deal. 4-year average yield at 2.6%, currently yielding 3.3. Not a terrible place to jump in there. And then Pepsi, heck yeah, one of my top 10 favorite stocks. It has hit that 20% undervalued mark, and I bought a little bit of it last week, and at like right around 160 or 161. It fell off even more this week. So, hey, I am going to take advantage of that deal. And Johnson & Johnson's starting to creep into that buy zone again as well. There's tough week for pharma. I think that there's a little bit of fear around RFK Jr. having a major say in the pharmaceutical space in the Trump administration. So keep your eye on J&J. AbbVie fell off quite a bit this week as well, although I'd say it's just about fairly priced right now. But keep an eye on those pharma stocks and see if there might be some value there. Tier 4, 54 and older investors, where we're looking to get a good solid 5% or better starting yield on these stocks with a growth rate anywhere from like 2 to 5% on average would be nice. We don't want to completely throw dividend growth out the window. Still not anything super appealing here in this group, although realty income is starting to pull back a little bit and looking a little bit more attractive as a buy. Nothing else here to me screams massive value at this point in time. I would love to see like these BDCs like Maine and Ares Capital get cheaper, and they may if interest rates continue to go down. But for right now, I am not going to add any of these personally to my portfolio. I would rather get high yielding ETFs. Just a quick swing by the top 10 tab. This is where I just take my 10 favorite stocks, put them in their own tab so I can keep a closer eye on them. They're all in the tier 1 through 3 category. And right now, Pepsi is the only one that I'm going to add money to, with Johnson & Johnson getting close. And really, if they're lower or if they're yielding higher than their 4-year average, I'm never going to turn my nose up at you if you add them. If you wanted to add McDonald's, Union Pacific, or Coca-Cola right now because you just love them and you're trying to build up a position, you could definitely do a lot worse. But right now, Pepsi is the one that gets my focus. All right, so money allocation strategy. As I said, 50% goes into ETFs, 50% into single stocks. Tiers 1, 2, 3, and 4, I've got the ETF allocation that I like to do for these categories sort of lined up here, where I'm doing S&P 500, small cap value, dividend appreciation, and international in the tier 1. Same thing in tier 2, but just with different allocations amongst those ETFs in mind. Tier 3, I'm getting higher yielding ETFs like VYM, SCHD, DHS, that kind of thing. And then in tier 4, I'm doing high yield stuff. So SPYD is my stock allocation. I just want those top 80 stocks in the S&P 500, or excuse me, top 80 highest yielding stocks in the S&P 500. And then I'm trickling 5% into high yield bonds, preferred shares, MLPs, covered call ETFs. And I'm just doing that 5% into VYMI across the board. Now for the stock allocation strategy for the tier 1s, I'm going to do 30% into Nike. That's the most undervalued one in that tier. Top 10 stock, Pepsi, I'm going to do 10% there. And then because I've got 50% or better undervaluation metrics here for Hershey in tier 2 and ADM in tier 3, I'm going to do 5% each into those. Take advantage of it. Get a little bit of higher yield in the tier 1 category. Why not? Tier 2, same 4 stocks, just a little bit of a different order. I'm going to put the majority of that into Hershey, so 30% of my allocations go in there, 10% into Pepsi, and then 5 each into Nike and ADM. For the tier 3s, doing 15% each into ADM and Hormel, those top 2 there. 15 is also going into Pepsi, because that's the tier that Pepsi's in, so might as well hit that one hard. And then I'll do a little dip down into tier 2, 5% into Hershey seems about right. And then still doing the ETF double down for the older folks here. Instead of 15, 5, 5, 5, 5, I'm going to do 30%, 10, 10, 10, 10, 10. I still do 5% on the international stuff. So I've got 5% allocation left over. Why not throw that into Pepsi? You're still getting a yield well above 3%. You're going to get some dividend growth. And Pepsi's just a great company to own. So what did I do this week? Well, let me show you. I put $100 into that Fidelity account this week as I'm building this portfolio from the ground up here in week 5. I've got $100 total dollars invested. And the way that I did it was, because I'm a tier 2 investor, I did just like I showed you on the last tab. I put 30 into Hershey. Let's see, 5 into Nike, 5 into ATM, 5 into Pepsi, or 10 into Pepsi, excuse me. And then for the ETF allocation, it was 25 VIG, 15 VOO, 5 VBR, 5 VYMI. Here is the income, the forward annual dividend income that I added for each of those positions. That got me $2.42 of forward annual dividend income. My yield on cost is right exactly there at $2.42. value, it's down just a little bit, but what I'm really looking forward to here is the annual income. I've pushed that up to $12.10, and I will keep adding to any of these positions so long as they are on sale. So what did you all add? Is there anything in the buy zone that you're adding or that you're concerned with? Leave me a comment down there. Let me know. Email me questions at dgicrab@yahoo.com. Check out the links in the description below to a video on each of the 4 tiers and an ETF video so you know exactly how I put these lists together. Thank you so much for tuning in, y'all. Have a great weekend, and I'm going to go give my new car a little test spin.